Pandemic 2020 might put your business into a loss position. Plan 2020. Not only you should not pay any taxes, you should be getting money back. Join me and find out. I want to correct some concept that out there with folks. Some people, some of our small business owners, they tell me that, well, I don't need tax planning. That's for rich and wealthy. And that is so not true. And it is almost like to say that you're comparing tax planning to the coupons, right? You go to Hy-Vee, oh, I don't need coupons because I can pay for it, or I want coupons because I want to save. No, tax planning is actually simply just way of life for business. If you don't plan, you are just ready to pay tips to IRS, which is okay. IRS gets a lot of tips, right? So you can be one of those and paying tips to IRS, but you also can be one of those plan your taxes. So when you pay taxes, you pay it happy and happy, because that's what you're supposed to pay. But you already planned in the way that you're taking all the advantage that the government meant to give you, just because you don't know, so you don't take it. Okay. Then the other thing is, we want to say that when you have tax planning, is not about just planning for people who has a lot of income, and it's planning for businesses that you had loss. Especially right now. For 2020, if you are the business that for the first time ever you experienced a loss, boy, you should not pay taxes, and you should get money from the government, from the taxes you paid in the past. So that's why I'm here today. Really want to talk to you about what should we do with taxes, with tax planning. Someone always asks me, oh, who I do tax planning with, because my preparer doesn't do that. I'll tell you that tax planning need two kind of brains. One is accounting brain, the other one is tax planning brain. And there's a third brain called financial planner brain that we don't want to deploy that. Because tax planning is very real. Tax planning is planning for this year. I am planning for 2020. I am not talking about 2021. Unless I know for sure it's coming. And who knows? President can change, law can change, things can just go wacky, right? We don't know what's going on in the future. But financial planner always tell you that save $1 today, tomorrow that's $1 million. Well, my personal experience is that I saved $1 today and I invested in the stock market, it went into negative. Okay, so I don't know about the future on that, but I do know what I can do today for 2020 to save the taxes you're supposed to save, and also get the money back you're supposed to get back. So you want to work with people with accounting brain and also tax knowledge. And a lot of preparer shops, not necessarily the place, just because they don't really know accounting side of things. And you will learn very soon with this 60 minutes, and you will know that accounting is actually important. So let's talk about planning for business. And of course, there's so many things I want to talk about. And there is one webinar in my in our channel. It's called a 3D, three-dimensional tax planning. That is a creation of Community CPA. That's not something we got from internet. And we created that concept to capture all the important things that you need to know. And of course, that's a basic. You need to know that first. And then we talk about the related to today, related to the pandemic, related to CARES Act, related to the Job Act back in the 2018, how exactly this planning gonna be today. So that's where we're honing in for 2020 tax planning that need to happen in October, November, December. And some of those planning, you cannot do it when you are already into 2021. So it has to be done right now, and I'll tell you why. Now, the first one is planning tips for business. Number one is proper accounting for the following item: PPP, EIDL, grants, payroll tax deferral, payroll tax holiday. You probably don't know all of it. If you don't, let me explain that to you. you got the PPP. Most of the small business did receive PPP. So you're going to ask me, Ying, is PPP taxable income or not? And that question is really depends on who answer that to you. It will be a yes, it could be a no. Okay, so if your PPP become a loan, say you didn't pass the forgiveness, it ended up become your loan, then your PPP is not taxable, it's a loan. So all of the money you paid with PPP dollars goes back to your expense that you can write them off. But if your PPP become a forgived loan, become something that they don't take it anymore, you got the letter from SBA say your PPP forgived. If that is the case, your PPP will be disappearing from your income together with the portion of expenses that you use PPP dollar to pay. So that rent, that payroll, that utility that you included in PPP, that is not part of your expenses anymore. So if you did make income, then obviously it's sort of like, oh yeah, you have to pay more taxes. That is because your expense is gone, not because your income is increased, right? So that is where the PPP is. EIDL loan, it is a loan. There's no forgiveness for EIDL loan. So EIDL should never ever become your income. That number, that 150,000 you got from SBA, that should be sitting on your balance sheet and not income. Okay, so why I call that planning tips? Because we just have plenty of people and put all the government giving, government money, SBA, EIDL, they put that under their income. And you think the tax preparer knows that is not income if you don't tell them? So it is your responsibility to know the sources of income, the sources of deposit you have in your bank, where that come from. Okay, grants. So you may say, well, I got grants. Taxable? Non-taxable? What is it? So depends. So you want to look at the grants to see what you did with it. And look at the grant to see whether that is going to be your income or not. If it is your income, most likely they will give you a 1099 miscellaneous statement. And in 2020, is actually, if you applied as a sole proprietorship, you got that under your name, the form is no longer 1099 miscellaneous, is a 1099 NEC, non-employment compensation, NEC. Okay, so that's a change in 2020. So make sure you know that when you got a 1099 NEC, and don't throw it away. It is the same as a 1099 miscellaneous, but it's just representing non-employment income. So you may get that. And when you get that, you have to include that in the income. Now the task is yours, figuring out what kind of expenses should go with that. Maybe you paid someone to write that grant for you. So that grant, that charge they charge you, that should offset your grant income. So those are the things you want to plan, that you want to know ahead of time. And the payroll tax deferrals. Payroll tax deferral is the Social Security taxes that you did not pay from March 27th all the way to December 31st. Some employer took that, some didn't. The one you took it, and you still have expenses on your balance, on your income statement as a Social Security employer match. And on your balance sheet, you start accumulating liabilities because you don't need to pay. Because you pay them next year, the year following, and you don't need to pay, so you have them as liability. Now, it becomes important for you to tell me, is your tax filing that you submitted to IRS for your business, is that cash method or accrual method? Don't tell me that you don't know. You have to. If you need to really manage your business, that's fundamental. That is so important. You cannot say you don't know. And you might say that, well, why? Nobody ever asked me about that. I went to do my taxes. They just did it for 20 years, and they never really asked me, whether I'm cash or accrual. So let me tell you, if nobody asks you that question, just means your tax preparer used the default for the form. So that default at cash basis. If it is cash basis, you didn't pay off, then you cannot deduct expense. But if you're on accrual, you can deduct all of that. Right? So that's the plan. And then you say, whoa, can I change? The answer is yes. You can change your accounting method. And that's why we have planning session. There's a reason for everything that is done in a certain way. I covered that in the three-dimensional tax planning videos that I have in YouTube. Payroll tax holiday. What's that? And August 8th, President Trump said that our employees don't have to withhold, we don't have to withhold the employees' Social Security. And they need to have a payroll holiday. So they're supposed to get 6.2% more net paycheck starting from September 1st to December 31st. If you have that, and you're asking me, and is that an expense I can deduct? And yes, that is expense you can deduct. Because those are employees' salary, the gross. You should deduct the gross anyway. And even though you didn't pay, and they have the money, but you from your gross salary, gross wages standpoint, you already wrote them off on your income statement. So you want to make sure you know the difference between payroll tax deferral and the payroll holiday. All right, so I mentioned about accounting. So this is my number one tip today. You need to know all of these government things you have, how to treat that in your taxes. If I finish talking and you are like, no, I don't know what you're talking about, then just contact us, set a planning session with Community CPA, and we walk you through that. We have a checklist in our firm to make sure that we take care of our client with this special crazy year. What else can be crazier? I mean, I think we got everything, in human history. And I'm just waiting for a massive recount that would last for like 6 months to 8 months. So, all right, next one. Next one is so big. This net operating loss is so big. If you don't even know what I'm talking about today, I want you to re-watch this video until you get it. I want to knock that into your head so you know that this is something you can do, okay? Sometimes, we all know that as a business owner, we plan what we spend in the year. Let's say you got a horrible year and you are already like breaking even. Come on, Ying, I don't make anything. What I made, I paid, that's it. That's wonderful. And maybe what you need to do now is to look at what you need to acquire for your business and maybe purchase or expand on expansion. We know pandemic is not permanent. You agree with me on that, don't you? And this is not permanent. Life goes on. The one who can really meet the demand when economy reopen, not these declarations from any government officials. I'm talking about a real reopen. People are feeling safe to go out. So when that happens, you don't want to be the business that cannot meet the demand. So it's a perfect year to expand. So when I expand, I got more expenses. So I am literally at a loss, right? I have a net operating loss. My point is to say you can plan for net operating loss. Okay, so now CARES Act did something fantastic. CARES Act has this spirit of giving you money back. CARES Act says, if you have a loss this year, you can go back to 5 years to figure out which year you paid taxes, and we allow you to get that taxes back to 2020. so you can have cash in your hand. I am running examples for you today because I want to knock this concept into your brain and also make you feel that your hands knows how to do it. Okay, so the CARES Act permit NOLs from only 3 years, 2018, 2019, and the 2020 tax years to be carried back to previous 5 tax years. Okay, ladies and gentlemen, 2020 means I can go back to what? 2015. If I made money in 2015, I have a loss today. I can go back to get what taxes I paid there back to today. Also, not only that, also the CARES Act says in the past, we used to have this 80% limitation on taxable income you can offset. So let's say, before they say that, oh no, you can't offset 100% the gain from prior year, only 80%. They took that out too. You can offset, okay? They suspended the 80% of taxable income limitation through 2020 tax year. Okay, the NOL carryback can result in an immediate refund of tax paid in prior years. So now, let's do some understanding and calculation right here. Okay, so before 2018, I am talking about the time when Job Act wasn't here, when Trump was not the president. Before that, prior to 2018, the loss you have in business, you can go back 2 years and going forward 20 years. So let's say if I have a loss in 2017, I can go back to 16, 15, or I don't go back. I can push it out to 20 years in the future until 2027 to get that offset. And it is when you carry forward, it offsets 100%. When you carry backwards, it had that 80% limitation. Under Jobs Act, this is the President Trump implemented, and starting from 2018, the laws cannot go back anymore. So they stopped, they shut the gate to the back, but you can carry forward indefinitely. You don't have 20 years limit. And as long as your business survives, then you can continue to carry forward. And one carry forward could only offset 80%. So they say, well, not carry forward 100% to offset. Every year you offset 80%. So in other words, Job Act really kind of killed NOL. It didn't really it kind of shrinked the benefit by a lot. And now, the CARES Act come around. This was in March 27th, right? So the CARES Act come out, and it says beginning after December 31st, 2017, and before January 1st, 2021, loss, net operating loss, can be carried back up to 5 years. 5 years. Keep that in mind. Now, example. I know you will like example. I'll make this example so crystal clear, you get what I mean. Okay? Now, let's look at example. Example 1120. This is the corporation tax return. And I also have the other examples for you folks. If you don't run 1120 C Corp, you're saying that, whoa, I have a LLC partnership and 1120S. No worry, I have that example too. Okay? But right now, I'm talking about the C corporation right here. 1120 under calendar year 2018. So in 2018, loss can be carried back to 2013. And in 2019, the loss can be carried back to 2014. 2020, carried back all the way to 2015. So they give you 5 years. You see that? And because they were hoping that within those past 5 years, you're going to find those years that you make money, then you can reverse that loss. So this is CARES Act. So when we carry back the CARES Act, when we carry back the net operating loss, the CARES Act also tells us how to do that. They give us two choices. One of the choice is simply file a additional form within your taxes. Okay, it has a limitation in timing, but the second choice is just simply do amendment. And the time frame is that, let's say your operating loss year is 2020. You can do this form before the December 31st in 2021. It is just one form. It's done. Okay. And so typically you receive the refund in 90 days and you file the form no later than 1 year after the end of the NOL year, which means 1 year after you close your business year. Whether it is December or June or October, doesn't matter, 12 months after. You can just file the form called 1139 or file the form called 1045 for the pass-through entities. All right? So you got all the answers, right? For 1120S, you have 1139 to file. And for the S-Corp LLC kind of business, you have 1045. Or you can file amended return. That gives you longer time. Let's say you just listened to my webinars and you just got busy with something else, nothing was done, but you always had this NOL lingering in your mind. You always thought, well, one day I'll talk to Ying when she's not busy. That would never happen. So I'm always busy. And but if you book your time 2 weeks ahead of schedule, you get me. And I am just not really available right next minute because things are really got planned out. And let's say you just didn't do it. You have 3 years. So for 2020, let's say you got a loss and you didn't do anything. You have 3 years from December 2020 and 2021, 2022, 2023, you can file amendment. So once it's become a law, it has to honor what the law says. So you will get your money. Now, we're going to do an example for 1120. Okay, this is a C Corp. And pretend 2014, they have taxable income of 20K, 15, 20K, 16, 20K, 17, 20K, 18, 20K. 2019 came. Oh, remember, I keep on talking about 2020, but 18, 19, 2020 are the same, right? They have the same treatment. The reason I didn't use 2020 is because the tax form for 2020 is not here. So I don't want to make up, I don't want to white out the 2019, give you 2020, which is not going to be right, because there's a lot of things they need to change. But I want to use 2019, but the story is the same, the understanding is the same. You can really, it's stuck, walking like a duck, so you can kind of simulate for 2020, okay? So 2019, we got $100,000 loss, and we got a pandemic, just pretend, started in 2019. And now we can take a look at 2014 taxable income, and this is 2014. This is, I made it up for you. So, but the form is real. It's just the number is made up. The name of the company is made up. But look at this. They paid total taxes of $3,000 that year in 2014. That's what the people were doing. They paid, you know, you wrote check and you paid it. You paid it. Now, 2015, you have 20K taxable income. You pay taxes for 3K. Again, you paid it. 2016, you had a $3,000 again. You paid it. 17, and you have a $3,000 tax due. You paid it. And 2018, just like what you were doing, And the 2018, remember that is the year that the Job Act came out and changed the corporation taxes to a flat rate. So for low income C Corp, actually your tax went up. So now you paid $4,200. Okay, so we are in this year, we have net operating loss, 100,000. So in this one, I want you to look, and you have $100,000 loss, and normally, and if you don't, you know, a lot of people think that, well, I have a loss, so I have a loss. I don't pay, but I also don't get anything back. In this case, with CARES Act, the answer is absolutely not. You will get money back. This is how you will do it. Corporation application for tentative refund. 1139, folks. If you don't remember anything out of this webinar, I want you to remember two forms. One is 1139. The other one is 1045. Okay, so you fill up this form, and let me show you. It is asking you to put in the years that you are seeking the refund to come back to you. So I put 2016, 17, 18 on here. I have 2 pages because they only have 3 columns. We have 5 years, so I have to use 2 pages, but I show you the first one. So this first column, the left column is the original tax return. You know how to do that because you have your 16 filed, right? Then you're going to make a change, and on the right column for that year, because you're going to use up all the taxable income. So if you look at my second page, that is all the way to 14. See, on there, I have this the 5th, the 4th, right? If I go back to my previous slide, and that's a 3rd, 2nd, 1st. So I am doing NOL for 2019. I have a loss. I have $100,000 loss. So I'm offsetting the earliest year all the way to 2014. So what if I don't make money out of the in-between years? The only place I made money is 2014. Then you just list 2014. Okay, so with that, and you come up with this filing instruction. You have to mail it in. They give you the mailing address. And in this instruction, and it says that on or after filing date of the corporation return and before December 1st, 2020. And this is telling you that for NOL loss of 2019, you have up to December 31st, 2020 to submit this. What am I telling you now, folks? If you had a loss in 2019 and your tax preparer hasn't really done anything for you, and before December 31st, 2020, can you please just submit this for yourself? I mean, this is why we have tax planning. We have in our firm, our most busy season is not even tax season. It is planning season. Because that is how we come up with all of these things that when people are busy with filing your taxes, they don't think about. Okay, so look at this. It says that there is a total of overpayment of prior year taxes of $16,200. Where is that come from? That was 4 years of $3,000 tax payment plus 2018, they raised the tax rate, so it is $4,200. So it was $3,000 for 2014 plus $3,000 for 2015, $3,000 for 2016, $3,000 for 2017, and finally plus the $4,200 in 2018. So I filed 1139 for NOL of 2019. I got $16,200 back. That's a cash in my pocket, and that is mine. And you want to plan your tax. Am I convinced you enough that you're going to jump out of that chair and start doing planning? Okay? So that is what happened with 1139. And now I want to give you the example of pass-through entity. I know you were asking me for that. I saw several of you, and I know you have pass-through entities. And one thing I want to tell you, if you closed your company in 2019 or 2020 for whatever reason, okay, and if you closed it at loss, hey, ladies and gentlemen, you know what you need to do. You can't be telling me that, oh, well, I lost and I just, all these years I've been paying taxes. What's so good about business? And I closed and I didn't get anything. That is because you didn't apply for what you should get. So you want to plan that loss and know that even if someone coming in to buy your business, and if they pay you so little, you have a loss, and you can structure your working in the year to take advantage of this particular CARES Act, right? And so in this example, we say that the individual who is a business owner, and they have taxable income of this. On the 14th, they have 89,850. Just for calculation easiness, we made the number different so we can have our taxes more rounded number. So because the rate is everywhere with individual, they changed it in 2018 too, right? So now 2019, let's say we had a $446,800 loss. Why do I have that loss? Because I have a partnership. I was working with a partner in the restaurant, and the restaurant shut down for the year, and I don't have my income, but we have our rent and everything else to do. So I have a loss. Why is that even a question, right? I have a loss. So that loss become a K1 loss and went over to my 1040, right? That's my situation. Now, so in 2014, when I have that income, taxable income, I paid $14,470 taxes. Okay, so let's run through how much taxes I paid all these years. So 15, I paid 13,000 with change. 16, I paid that with change. 17, I paid that with change. 18, I paid that. And remember, in 18, there is a lower tax bracket for kind of middle class American, and that's the part of the Job Act too, and it's come with that. So that's that one. And then 2019 come, boy, I have a big loss. My AGI is negative. This is your AGI, adjusted gross income. You are losing a lot of money. So now what do? Do you just let your AGI be that way and you're done and you pay your fees with your preparers and you go home and the life just ends right there? No, you are going to file 1045. What does 1045 do for you? It is exactly the same as 1139, but it's for individual, for 1040, okay? So you kind of see the similarity. I am so sure you do. Look at that. And then you have your original return, tentative return, original return, tentative return. Original return, the tentative, what you want that loss to be written off, right? So the second page, so we covered the whole 5 years. And here you go. I am getting my taxes back, right? So this is my Form 1045. This is the instruction. The instruction says, says that before December 31st, 2020, and I give this Form 1045, and this is a total overpayment of prior year taxes of $89,216. Tell me, how cool is that to get that refund back properly, legally, legitimately, and just because you have that knowledge, you have that understanding. This is so important. This is where I want you to know that tax planning is not for the rich and the wealthy. Of course, the rich and the wealthy can make themselves only pay $750 for 15 years, but we're not there, and we're not that rich to pay only $750. We don't mind to pay more, but here, and at least we get back when we really suffering, when we really have a loss, when we struggles and need that cash flow to keep the business afloat, then we have this, right? Now, that concludes my NOL. I just want you to remember two things. If I got you so wrapped around and you are like, Ying, I don't know what you're talking about, that's okay. I just want you to look at your tax return. If it is a loss, you ask, should you be filling out 1139 or 1045 to the preparer that you're working with? And if you don't even want to ask that, and you just don't think they even know what you're talking about, and then you just come to community CPA. We will take care of you. That is our specialty. We're such good tax people. We do everything right, and we study hard. There's no difference between us and anybody else. I'll just tell you that this firm just know how to work hard, good or bad. You know, you burn people out too. So far, I haven't been burned out yet, so I'm good. So I think other people's are good too. All right, donations. I want to mention this because some of our clients, I remember, I can even think of them. They have a real business on one end. They also have a nonprofit on the other end, 501c3. And the business always donate a portion of their income to the nonprofit. It used to be limited at 10% of the net profit, the percentage of taxable income. And it used to be 10% of the net profit, which is the taxable income. So let's say if community CPA has $100,000 net income, and the most I can donate is 10% of that, which is $10,000. They raise that cap to 25%. I just want you to know that. And so you can consider whether if you have that kind of nonprofit you love and care, and you want to donate this year, especially this year, their homeless shelters, the food banks, and the people like that. There are people running out of food, and the grocery store's price rise so much. There's a lot of people could not afford food. I am not imagining this. I see, and I know. So I want you to think that if you did make money, you can donate up to 25% to these nonprofit organizations, and you can deduct that as a business expense. Not 10% limitation anymore, is 25%. Then the other thing I want to talk about, it is this last piece called qualified improvement property. Let me translate that into Chinglish or Ying's English, right? And what that is a certain renovation related expenses, typically with small businesses. Let's say you decorate your retail store in the mall, or you renovated your interior for your office. And so that part of the qualified improvement property expenses, and that you can do bonus depreciation. Okay, bonus depreciation means that you can depreciate that fast. So for example, and you have a retail store and you upgraded all your inside of the retail store, and that is $250,000. So before CARES Act, Job Act made this one to be depreciated like the buildings 39.5 years. Like you have to depreciate it really slow. There's no bonus depreciation anymore for that. So some people say it was done by mistake, but some people say it was a setup, and it is the intentionally done to ruin businesses. So there's a lot of saying about why that was that way, but CARES Act reversed it. CARES Act put that into what we call the qualified improvement property category. That means your depreciable life of that property from 39 years to 15 years. So once it becomes 15 years, suddenly you are qualified for bonus depreciation. So that's why the speed up depreciation would come in. And that applied to 18, 19, and 20. So I don't want you to think that, well, I didn't do anything in 2020. No, that's not my point. My point is that if you did something in 2018, and when you filed your taxes, you were subject to that Job Act, that was the one that disallowed your deduction. So if that happened to you in 2018, and wake up, and you need to do planning right now to get that change. There's two ways of changing it. You can always amend your 2018 tax return to get that right, so you pay less taxes, got your refund back. That's okay. But you also can file a form 3115. That form is called Application for Change in Accounting Method, to catch up on the depreciation deduction that shouldn't have been captured in the previous years, to catch up right now. So there are ways to do it. And I just want you to know that this is the one that Job Act took it away from people. Now it is coming back. So it is a really good tax saving tips for people who are having renovation type of property improvement work done in 18, 19, and 2020. So now let me tell you this. So what if you don't have it? So 2020 is not done yet, and your business is not so great, but you do know that when business gets better, you need to renovate your space. What should you do? If you could borrow money, I would want you to renovate your place, spend that money, make a loss, and come over to do the carry back on NOL. All right, so that is kind of give you the 2 cents I have today for all of you related to the planning. And the planning is an art. Like I said, there is nobody is going to tell you that you must do tax planning, just like not everybody appreciate arts, okay? So it's okay if other people don't do, but once you listen to this webinar, I think the take home is that, you know what, if I know more, I would say more.